So, good morning, everyone, and welcome to yet another session of Pre-Bell with William O'Neill India, dated January 24, 2023. So, before we go ahead, I would like to give a small disclaimer that any stock, any security that you might discuss in today's session should not be considered as a buy or sell recommendation, and we are just doing it for educational purpose. So, without taking up much time, I'll start with Nifty 50's chart analysis for the day. And if you talk about Nifty's current status, we all know it's in rally attempt. People who are following our mailers, who are into the webinars, who have been into stock Drabar, we've been talking about, the different status of your market rallies in terms of from the William O'Neill's perspective. So RA or rally attempt is the one if, where your market kind of moves in a sideways direction, has been moving in a sideways direction if you look at it, and an FTDD is awaited, right? A follow through day when Nifty has to advance on 1.5% on volume higher than the previous day. But as you can see in this last rally, when we were talking about where from 16,747 to 18,887, nearly more than a 2,000 point rally, and the FTD came right at the top, and post that Nifty saw some kind of correction. So there's this condition of buy switch which you are talking about in the stock darbar as well. If Nifty reclaims certain key moving averages, your buy switch can be turned on as well. So talking about the buy switch, if you talk about the key resistance at this moment is the 50 DMA, which is around the 280 levels, and your 10 weekly which is similar to your 50 DMA is around the 180 mark. So if Nifty closes above your 180 and around those 90 to 80 levels, then the buy switch will be turned on. And similarly, you can see some additions happening into the model portfolio. But if you talk about from the market status perspective, we would, even if the buy switch is turned on, we'll be cautiously adding into the model portfolio. But if for the market to go into a confirmed uptrend or a proper rally, you need a follow through day. That's the only condition. Talking about key news, as the result session is going on, you can see company reporting on the results. Tata Communications was one of the bigger one that reported its result post the market hours in terms of revenue increased by 8.2% YOY. EBITDA declined 0.5% YOY. EBITDA margins contracted to 110 bips YOY, and PAT declined 0.3% YOY. Sagar Cement, the revenue increased 72.6% YOY, but you can see margins pressure still elevated on these companies as margins contracted by nearly 570 pips YOY, and there's a PAT loss for the company as well. HFCL revenue declined by 10.6% YOY. EBITDA increased 10% YOY. EBITDA margins expanded 30 pips YOY to 17.3%. PAT increased 22.7% YOY. Concor was the one that probably reported a good set of numbers in terms of their Q3 FY23. The revenue increased 3.6% YOY, EBITDA increased 14.1% YOY, EBITDA margins expanded 190 pips YOY 21.4%, which can be considered healthy, and PAT increased 3.5% YOY to 296.5 crores. If we talk about companies that will be reporting results today, Colgate, HDFC AMC, TVS Motors, Supreme Industry, Tata Coffee, Indus Towers, Indoco Remedies, Granules India, Elecon Engineering, and others will be announcing their Q3 FY23 earnings today. So similarly, I've taken the chart for Concor just as a reference to probably post results. How can the stock be played out if probably your buy switch gets turned on, if your 10 WMA or the 50 DMA gets reclaimed. Even if you can see the last few quarters results have been healthy, but you can see a declining trend in the results, and that's where the EPS trend at the moment is fair. Overall, the number of funds has been increasing, but you can see the last breakout wasn't successful for the stock, and the stock came down and found support near the 200 DMA. And probably, if you talk about yesterday's movement, then it did breach the 200 DMA, but just before probably the advent of the result, you could see it reclaiming the 200 DMA. And if probably going forward, it reclaims your 2150 DMA, then it can be a good sign. And one, considering the market that we are in terms of sideways and choppy market, you can wait probably it to reclaim or probably to re-break out at the 782 levels. And probably at those 782 levels, why you need to break out? Because you can see like when the breakout failed, at the breakout it formed several blue dots. That is, the RS line was hitting new highs. So that was a really good sign. But RS rating or the RS line has declined. So that is not a good sign. Probably 10% from here, you can see a good price volume action. Your RS line can also move higher. And if that moves higher, and at that point in time, probably if the stock breaks out on above average volumes, then the stock can be looked at by interested market participants. Talking about the global market update, again, your US markets ended higher in terms of Dow Jones up by 0.8%, S&P 500 by 1.2%, and your Nasdaq Composite by 2%. Shanghai, that's the Chinese market, again, remained closed on account of their Lunar New Year holidays, and the Kospi have increased by 0.6%, and Nikkei is trading higher by 1.6%. Talking about SGX Nifty, even SGX Nifty is trading higher and is trading, if you talk about from yesterday's close, it's nearly 110 points higher, which can be considered as a good sign. And it probably, if it's able to give a close above the 10 WMA, you can probably seek a good price volume action going forward. So thank you, and that's it from my side. And stay tuned to the space of Preval with William O'Neill India from Monday to Friday at 8:45.